Hey everybody, David Skrika. Sorry for the late stock chart of the day here, but I think I've explained this in the past. I work for something called Financial Intelligence Report. I think it's only $110 a year if anyone wants to get it. It's a really good publication. They do monthly newsletter. I've written for it for 15 years. It's through Newsmax and all the big financial um, community. And yeah, so the sorry, financial website. So yeah, I highly recommend it. So was writing an article for them and so those articles take me about a full day and they're a bit mentally exhausting as well. Articles about Argentina, something I've talked about here for the members, and in general in stock chart of the day. Um so then I kind of need a few hours break, and then actually a few hours break I was watching England have the most boring game ever. uh they were still finished in first place, but I have no expectations. I'm kind of snake bit when it comes to sports teams. England in international football, Leeds United in club football, um, uh, Raiders in NFL, Oilers who lost game 7. So it's been a long drought for any of my teams who have won anything recently. I'm a Lakers fan of basketball, but I hate LeBron, so I didn't really care when they won that one with LeBron. But I guess that's So it's been 50, actually 2009. I think that was the last time the Lakers won without LeBron. So, and, boring sports there stuff. So this is the yen. So I just wanted to show you this. So, when I was, I've been talking about how I'm worried about the market. We're seeing the actually, I want to show thing here. We're going to look at the equity clock as well. Cause I said I want to do seasonal, so I'll tie this in with it. So, I've been kind of like worried about the market, what's going to happen with the market, et cetera, et cetera. And, the internals are weaker. It's just NVIDIA and a few stocks carrying the market. So I'm like, well, what could cause it? Well, Japan is one of the largest economies in the world still. We all Japan has this gigantic debt load, so Japan cannot raise interest rates like to the U.S. level. So the yen is weakening a great deal because why would you buy a Japanese bond for 1%? And their market has basically been based on like all this QE the Japanese central bank has done for the last 10 years. So and why would you buy their stocks while their currency is declining when you could go buy a 5% bond in the US, right? Or Canada or basically any Western country now. So what we've seen here is like after this huge upwards run from the early 80s so it's basically a 30-year bull market. We've now seen about a 12-year bear market, but when the yen was in kind of this big kind of sideways, position roughly from the early 90s to the early 2020s, it wasn't really a big deal, right? But now we're seeing the yen up to 160. This is the reverse chart, so it's 62 here, but it's at 160 right now, and we're seeing this back to the lows of 1990. If we break this low in 1990, then you're going back to 1986 levels, which would be, now you're talking 86, 87, you're talking George Michael and INXS, like you're talking a long time ago, and you can see that you just like we had this big breakout in the Japanese yen from the mid 80s to the mid 90s. It looks now like we're seeing this big breakdown. And I wouldn't be surprised if we break this support level. Really, there's nothing until these early 80s levels. So that would be like 200 on the end. And the problem is that Japan, even though you might say, oh, that just makes their exports cheaper and all this sort of thing. But the problem is Japan isn't like, they have like no natural resources. They're not like the US that produces all this oil, or the US has like gold and silver and resource copper production in places like Nevada, oil and, places like Texas, same thing in Canada and some of these other countries. They have to import everything. So import costs start becoming sky high. And what happens at some point if the bond vigilantes come out, even though Japan's bond market, but we are seeing that, we've talked about that in the past, that if their rates can have to say spike to 2, 3, 4% to protect the currency in kind of a selling panic, then Japan's economy essentially is going to collapse. And maybe that is what triggers this. Because, even when small economies collapse like Thailand or South Korea in 1997 or Russia in 1998, and they're very small economies at the time, that brought a lot of turmoil to the market. So what do you think a Japanese type thing can happen? So now let's go look at, let's go look at the, I'll look at the S&P 500. So this is the seasonals of the market. So again, they talk about sell in May and go away. And you can see actually the biggest gain in the market is here from September, October. Here all the way into May. So even though this is a bit of a gain, it's a much smaller gain from here. And definitely the summer. Remember, we're right about here now, right? So, often the market, but you can definitely see it's in July to October, nothing happens. So maybe the market continues strong for another month, but we're definitely now entering the seasonal period where the market can go down. And remember, this is just the last 20 years. If you were to go back like 50, 60 years, you'll see this period from May to October is even weaker, right? So, and you can see like this top here in like, say, early May or early June is not much lower than the bottom here in October. So maybe, like I said, we could have some more strength, but the way things are kind of playing out here is like we're looking at this kind of seasonal, May to July top moving down, and maybe this yen is the thing that breaks it. So I did a short recently in my pay service. I haven't done any puts yet. I've been very, very patient because I did believe in the seasonality, and I figured, okay, if we break, it's going to be in the later summer or fall. And that looks like that could happen. We could have sometimes in election years, the market can often hold up into the election and then sell off after the election. That happened in like a year like 1980. I think it happened in 1976 as well. So that can often be the case. So, okay, I think I'm going to leave it on that note. I hope you enjoyed this. And tomorrow we'll have another chart. Again, I think for the next week, I'm going to continue on this kind of seasonality trend.